we go live on YouTube, on LinkedIn, and on WhatsApp. Live on YouTube, live on LinkedIn. And message to people on WhatsApp. God damn it, a lot of people leaving because of Thinker's frequency. Just 2 more days to go. Live. Let's go. I'll check myself on YouTube. It's good. Check myself on LinkedIn. It's good. Let's begin. Let's have the show. Bum 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 bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Got a divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis that don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, you gotta follow tradition, right? You know the tradition? You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Beautiful. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you're not alone. It says that we're in this together, which is such a beautiful thing to say. With that out of the way, let's begin. Some wonderful comments from Mr. Peeyush Sethi. Have a feeling like one of my favorite TV series is coming to an end. Making sure to join the grand finale episode. Well, Mr. Sethi, we had a development. So what we're going to do is we're not going to do it daily, but we're going to do it every Friday, right? So we're going to keep in touch. It's not going to be the same thing, but we're going to manage somehow to meet every week, every Friday morning, 8 a.m., right? As usual. And we'll continue the tradition, though weekly. It will not be the same thing, of course. Daily is daily. Daily is extremely nice, extremely tight. It becomes a routine. Now it'll be a weekly routine, a little less regular, but a routine nevertheless. So it's not gonna come to an end, right? Though it's so sweet of you. Thank you. Speaking of analysis, we've got to begin. Something really crazy happened, folks. Groq, G-R-O-Q. It's a semiconductor play, the chip play. That has been acquired by Nvidia for $20 billion. So it was supposed to be competition. It was a very high inference chip play. It's been taken over by Nvidia for $20 billion. People are suspecting that this could lead to an antitrust kind of a situation, but it's most likely not going to do that because favorable administration and whatnot. Groq had somebody called Mr. Chamath Palahipitiya on as an investor. He invested $10 million in Series A for a 28% share. That is easily, about a $4 billion of gain. So he's really, really won big when it comes to the whole play. Mr. Ankur Pandit says, glad to know that this routine will continue in some shape or form. Yes, Mr. Pandit. So that is a huge, huge win for any investor, right? $10 million to $4 billion. That is extraordinary. Once again, Mr. Chamath has gotten extraordinarily lucky. He is one of the early members of Facebook when Facebook was the thing. He got into it, got into a product kind of a role, very non consequential, but very early. So he stayed, and as he stayed, he became an extremely successful tech executive in the Silicon Valley. As he was going through that journey, he later started Social Capital, whose job was essentially to start SPVs, right? The SPACs. SPACs are basically vehicles, financial vehicles to take companies public in a different way. He did that. A lot of retail investors lost money because of him because he loaded shit on the retail investors in back in US. So that's his journey. He's once again struck gold, which is extraordinary, right? That's what's going on. Nvidia, in the meantime, is looking at exporting H200s to China, as we discussed. China, US wanted to sanction China, tariff China, because of what they're doing in the semiconductor industry, the manufacturing of it. But US has realized that it's going to take uh, 18 months to lay the sanctions. They're not ready to sanction China. They're not ready to attack China, so they're going to take 18 months, right? So US China AI rivalry is on. Of course, Russia Ukraine conflict is on. Things are seeming like that they're coming to a closure. Donbass plus Luhansk, that's Donetsk, is going to be handed over to Russia most likely. That's what they're looking at, right? Donbass region. Russia has taken about 70% of Luhansk, right? Luhansk, and Donetsk is almost there. So 70% of Donetsk and Luhansk. So that conflict is drawing to a close. But you never know. This has been on this journey for a very, very long time. So Russia is prepared to go as long as it takes, right? It's about Ukraine. How much is it ready to lose? So it's a very, very weird situation, but it's coming to a halt. Or let's say it's coming to a point where the talks seem to be a little more than nothing, right? So that's what's going on. All the other geopolitical situations are pretty much as they were, no news, right? Or a lot of news, which is all the more just the same, right? So that's what's going on. Uh, Gold, looking at all the problems in the geopolitical atmosphere, gold has again gotten up, right? So it's weirdly positive for yellow metals. Let me check the GLD price. It's just the daily. Daily is 0.41, but last night, in the 5 days, it has risen 3.5%. 3.5%, right? Just in a week, in 5 days. And silver is still up. In the last 5 days, it's gone 9%. 9%, folks, in just 1 week. Ideally, if you make 11% gain in a year, you are at the index fund. 11% gain you make in a year, and you do that for 7 years straight, you double the money. And silver did that in just 1 week, like 52 times faster than an average index return, right? That's what silver has been. It's crazy, but it signals a lot, right? This displays something, but nobody. The beauty is nobody's being able to make sure. Nobody's being able to get where this is going, because everything is going up. Everything. The stocks are up. The yellow metals are up. Bonds are. Everything is just up, right? So that's what's happening for now. Very, very weird situations. 1 week, 10% in a week. Silver, and that is a metal. Unbelievable. Anyway, folks, let's come to Indian matters. If you look at Bharti Enterprises, Bharti and Warburg, have plugged into Hire, India's arm. Hire is a Chinese heavy electronics, the consumer durables company. It competes with Samsung and LG, right? 49%. The company may be valued at 15,000 crores, so about $1.5 billion, right? One and a half. 15,000 crores. 49% goes to the whole Bharti Warburg play, and then 49 stays with Hire. 2% goes to Hire's executive team, the employees, and that is the structure. Hire is going to be looking at competing with LG, as I said. This is yet another move in Mr. Bharti, Sunil Mittal's quest in diversifying. So, as viewers of Thinkers Frequency know, he has been always looking at diversifying Airtel's empire outside telco. That's been one of his greatest regrets, that I have not been able to build anything outside telco. Upon being asked, like, one thing that you could have done better, he said, I wish we could have built something outside telco, because we got stuck in telco over concentration risk. So this is another move in this direction. If you remember, uh, Airtel also tried. Airtel is, by the way, trying the payments bank play, right? That is financial services. That's another of its domain. It's not clicked in yet, but it's on its way. Airtel tried to do consumer goods, right? When they tied up with whom did they tie up with when it comes to consumer goods? Do you remember, folks? Airtel, when they were trying to punt on the consumer goods market, which company they were working with? I don't even remember because it's so inconsequential. But there was a company. Adani was Wilmer. Adani Wilmer. Where was Airtel? Airtel. Let me check. Can anybody tell me? Would anybody like to take this up? Airtel tried the consumer products business. It failed. The joint venture didn't work at all. Which company was it? Uh, uh, uh. Oh, let me check. Airtel consumer goods venture. Which one was? Consumer goods joint venture. Says Airtel didn't have it. No, I'm sure Airtel had a JV. Which one was it? I'm forgetting. Uh, Airtel Consumer Foods. They tried to enter something. I'm not being able to remember. Yeah, Delmo. Delmo. Walmart. Oh yeah, Airtel also tried to do Walmart. They wanted to bring Walmart in, but that also didn't work out. And the consumer foods game was Delmo, the sauce play, right? Delmo is sauce and stuff like that, I guess. So that was what. It was so inconsequential that it took me at least like 2-3 minutes. In fact, even if you do a Google search, Airtel consumer goods venture, it doesn't show, right? It was so poorly done. So they gone out of that. Consumer goods didn't work out. The Walmart thing didn't play out. The Airtel Payments Bank is going on, right? And now this is Hire, the uh, consumer durables company. So let's see how Airtel does this time. It's very interesting. Mr. Sumanth Kumar says, like Metro Cash and Carry. Yeah. Walmart. It didn't work out though. They had to exit. Moving on, folks. Right? Market debutants close show with a historic finale. Year of record breaking rights. Record breaking rights, they're talking about IPOs, of course, raised 1.75 lakh crores in high profile listings. 8 issues account for over 44% of total funds. So eight issues, 44% of total funds. This it follows the Pareto principle, the 80-20. 20% of things get 80% of everything, right? Whether it's money, whether it's problems, whether it's whatever. Like 20% gets 80%, 80% gets 20%. That's Pareto principle. It applies to the IPO markets as well. Just 8 companies account for 44% of total funding. Total IPOs must have been in what? 103 companies listed. 103 companies listed in 2025. So this would go right in the Pareto principle. Pareto principle is one of the most incredible yet simple and ubiquitous principles that essentially runs the world, right? 80-20. It's just beautiful. Let's move on, folks. Non-bank funds up in companies' credit history. Corporate fundraising from all sources rises 13 year on year. Reliance on bank loans less now. That's exactly what's happening. Bank credit has gone down. Non-banking sources of money, that is basically equity, debt, and so on and so forth, that's growing up, right? 13%. So India Inc. is increasingly diversifying funding requirements by tapping non-banking sources such as equity, corporate bonds, reducing reliance on traditional bank loans. That has been the trend for the year end. And that is obvious because the India Inc. has had a lot of cash in the banks. The liquidity is not a concern. Their earnings growth is healthy, right? Everything has been pretty tight. So when this happens, you can take a look outside the banking play to raise money, and that's exactly what's happening. It's just pretty incredible if you look at the numbers, right? The ECBs. Looking at ECBs, by the way, ECBs, the external commercial borrowings, have sort of drawn down a little. Why have they drawn down a little? Because of there is a rate limit which limits how much people can raise through ECBs, how much of money essentially, what's the difference between the funding mechanism, right? Also, the dollar dominated bonds have sort of lost their price advantage for obvious reasons, right? Indian companies bond less with dollar, and so they're looking at domestic rupee based bonds. So external commercial borrowings fall 35%. Volatile US Treasury yields have been volatile, and dollar funds have been less attractive. And the biggest reason for that, as I was saying, was the rate cap, which is essentially, so bankers expect offshore issuance to recover in 26, with some of them projecting it to go to $10 billion. So it was about 12 billion, it fell to 8 billion, right? And now it's gonna go back to 10 billion. So they say that the ECB framework, which includes moving towards more market determined pricing from the current ECB ceiling of 500 basis points over benchmark. So 500 basis points, that's about 5%. Rate cap is one of the main factors restricting issuers from tapping dollar bonds. So that is the rate cap, which is which has been hurting the supply. 12 billion, 8 billion, looking at going 10 billion. So that's what the bond market is when it comes to dollar bonds. So they are looking at rupee bonds a little more for now. That's just these kinds of fluctuations keep happening. Nothing new, nothing old, right? If it's not new and it doesn't get old, it's a folk song. Right? It is a folk song. So let's move on, folks. Oh, just one second. Somebody's gonna take it up. Done. So let's move on. Banks seek certification on source of overseas transfers, right? Lenders insist impanel CAs, vet details, HNIs likely moving money abroad because of dollar and rupee price issue, right? Dollar is rising vis-a-vis rupee. A lot of people are trying to move money in dollars because that helps, right? So that is not permitted under the LRS scheme. LRS scheme only allows about 250K. 250K is $250,000. That's right now about 2 point some dollars, right? 2.5 some crores, 2.2 crores essentially. So that's what is permitted, right? But these people are trying to get it out. For NRIs, the limit is, so these people have done a mistake, right? At one place, they've said NRIs can take out a maximum of $1 million a year after selling properties or assets in India. And other place, they have written NRIs can take out 12 million a year. I think the real number is $1 million. They can take $1 million. So India doesn't want people to just hoard the money in dollars outside, because that's gonna lead to a lot of forex drain, right? And that's why this LRS scheme exists. That's why all of these things exist. So banks are basically trying to prevent that kind of outflow of rupee. You know, my friend was showing me $100 bill, right? And she got that $100 bill from, I guess, 2016, 17, 18. Uh, and she said this was $100 and it costed me about, some $6,000 or something, right? And now it's $9,000. In fact, more. So 5,000. 10 years ago, or 7, 8 years ago, it was somewhere around 55, 60, right? Now it's 90. It's like that. Just that paper has really gotten, up in value, which is a real concern. If you remember, I told you one of the investors, legendary investors, an Indian based out of the Gulf, said that it's pointless to invest in Indian companies, right, as an outside investor, because I invest in an Indian company and the rupee depreciates by 5% every year. And as the rupee depreciates by 5%, my investment, let's say in 5 years, is already half, right? 5 or 6 years, 8 years, it's already half. So even if you grow by value by 5x, right, it's just 2x, 2x, 3x, which is what I'm gonna make. And then there's tax and everything. So it's basically pointless for me to invest in an Indian company. It's not you, it's just that you're stuck in a country which is not working, he said. And I'm like, okay. So I had an elaborate response to that, and I wrote a post about it, and we've discussed it on Thinkers Frequency before, so I'll not repeat myself. But it was an interesting encounter. Right? Let's move on. India pumped up. Petrol outlets cross 1 lakh. So India has 1 lakh petrol pumps now. Has third largest fuel network after US and China. 1 lakh petrol pumps. In 2015, we had about 53,000 petrol pumps. Now we have 1 lakh to 266, right? IOCL, Indian Oil, it itself has 41,000 of those. Then comes BPCL, 24, HPCL 24, Narayana, Shell, everybody else, Nayara, RIL. This has doubled over the past decade, right? Third in command. It's so US and China. US has 1 lakh 10,000 and China has about 1 lakh 20,000. So it's gonna be very quickly, taking over. We worked, my company, the company I was building back, the Testament, right? We worked on a very, very big project which dealt with training of all the customer attendant staff for these petrol pumps. So we did for IOCL 13 states, 7 sisters, Bihar, Jharkhand, Chhattisgarh, Madhya Pradesh, Rajasthan, and Karnataka. So those were 13 states. We did approximately 8,000 petrol pumps. 8,000. Right? And that was a huge multi-crore project that we did for ISCL, a good project. And that's when we realized the length and breadth to which petrol pumps go, right? So when we were literally going to Bihar, our people, I mean, we were not going there, we had hired people. So we had like a 60-member team hired for this particular project. And this project ran for a year. So it was pretty incredible. The length and breadths to which this petrol pump, expansion has happened. It's just incredible, right? And the beauty of the situation is that the government, when they tied Swachh Bharat to that petrol pump, right, as a part of the Swachh Bharat campaign, what the government did was they asked these petrol pumps to maintain a public washroom, and that actually changed the game. It's one of the most brilliant moves ever by anybody, that you made a washroom compulsory, a publicly available free washroom at every petrol pump, because that's where you know the density lies. So petrol pumps became, public urinals. Although I don't know if they are so clean anymore, but it was a great move, right? And that essentially, uh, we learned a lot with that project, which was just incredible. 8,000 petrol pumps across 13 states, Northeast, the areas in which those petrol pumps existed. Traveling to those areas for our trainers was a task, right? Traveling and then training the customer attendant staff. It was just incredible. In fact, when I was doing a bike trip to Chandratal, I personally saw the highest petrol pump. It was at about 11 or 12,000 feet, right, from the sea. It was just incredible. So petrol pumps are really, uh, can say, the backbone of this country. Would it be fair to say that petrol pumps are the backbone of Indian transportation? Yeah, pretty much so, right? Speaking of petrol pumps, folks, China has done the unthinkable yet again. So what China has achieved is that they've made an electric charging station which charges in about 10 to 20 seconds, 30 seconds, and the car is charged full, an electric vehicle. And that sort of brings electric vehicles range concerns into focus, and they just knock them out of the park, right? If an electric vehicle can be charged in 40 seconds, uh, it's game over, right? Electric vehicles can, they don't have any problem. Now, what you want to do is expand the electric vehicle charging network. And once you do that, it's just electric vehicles, right? It'll take 40 seconds. It's basically exactly the same amount of time, which is basically required for getting a petrol vehicle charge. I'm sorry, filled, right? How a lot of visions had been laid bare when it came to the electric vehicle revolution, right? The most prominent vision was that it's gonna be a battery swap kind of a technology which is gonna be quick, right? So batteries are gonna be taken out, taken in, and so on and so forth. That's the only way electric vehicles will be able to work. Because let's say even if you get your battery charged in 1 minute, it's not gonna be uh, the same for everybody, right? Because battery health differs from battery to battery, car to car, right? However, it seems like that is not gonna be the vision that pans out. It's gonna be uh, a literal battery charging atmosphere, right? Which has systemic risks because every battery is different in a way, right? There's make problems and so on and so forth. Despite the standardization, despite everything, there are problems. But somehow this is the vision that's gonna pan out. No battery swapping, literal charging, plug and play, 40 seconds. Mr. Peeyush Sethi asks, is it done safely? It's not come for mobile phones yet, so wondering, which is a very, very interesting and fair question. If they couldn't do it for mobiles, how could they do it for cars, right? But apparently they've done it. They've done it. So again, we've got to take these things with a pinch of salt because a lot of things work very well when it comes to proof of concept, pilot stage, but they don't work at scale. So maybe it fails at scale, maybe it doesn't. But for now, it looks like they've accomplished something incredible. I'll pick out the exact uh, charging 40 seconds. Yeah. So China's incredible speed, true 40 seconds, is still futuristic. Uh, they've achieved it. BYD has achieved 5 minutes, approaching refueling times, right? Uh, Viral video captures BYD EV charging at a record rate. So it's actually a scale play. It is not. It is not. You know. It's not something which is proof of concept, folks. BYD has done it. I'm just checking. Yeah, it did it 250 miles, 400 kilometers in 5 minutes, not 40 seconds, 5 minutes. And they've achieved it. So BYD at scale has achieved it, right? Incredible stuff. China has really moved past everybody. India's trying to catch up to the basics, which is very nice. But we really got to evaluate where we're going to stand when China takes over the world, right? Let's move on, folks. Indian face double whammy when it comes to H1B. I'm getting bored of that news, so not gonna talk about it. Moving on. Social media 2.0 is changing the conversation. Rise of micro companionship. These people have done a report. It looks like a PR thing. Voice led paid interaction apps like Friend and so on and so forth. FRND, right? These people pay people to listen to you on call, 1 rupee to 15 rupee a minute. It's a bullshit business model, never gonna work. But they're trying to position it as some kind of a win, right? Uh, Mr. Ankur Pandit, right? Honda is using battery swapping commercially for its electric scooters in India. Doesn't happen at scale though, right? I mean, it's still getting piloted. That's what I've heard. But yeah, that was the vision, right? That was the vision for cars as well. But anyway, so we were talking about social media 2.0. What they're looking at is basically creators talking to people 15 minutes an hour, 1 to 15 minutes an hour. So they say that they're going to be making about 300 to 400 bucks in a day after talking to a lot of people who, let's say, so I'll tell you the points, the fault with this business model. Let's say if you give, let's say, 1 rupee or 11 rupee, let's say 11 rupee per hour, per minute, okay? 11 rupee per minute for the person, okay? That's the charge. How much are you going to be drawing out, right? You're going to be drawing out, let's say 10%, 20%. So you're going to be making what? 1 rupee, 1.5 rupee, 2 rupees maximum. Let's say you make 2 rupees, right? Voice over internet protocol costs what? 80 paisa, right? 60 paisa, something of that sort. That, and then the cloud thing, then the marketing thing and everything. So even if you are being able to charge, let's say 20% of 11 rupee per user call, right? You don't make money. The second question is who pays? Who pays for a conversation with a stranger 11 rupees per minute, right? Do you think there are a lot of people who are going to pay 11 rupees per minute, 1 to 15 rupees per minute? No, nobody wants to do that. So this is a business model which is dead on arrival, but it has raised a lot of money, right? And so they are basically trying to charge. And then there are security concerns as well. What if they're just sex chatting, right? Most of these apps, that's what they're leading to, right? They have creators who are basically offering stream services, chat services, and so on and so forth. And at the end of the day, you find out that, oh, it's something else, right? So that's what's happening. A lot of companies, some bullshit report says India's online dating and social interaction market to be $1.4 billion. All of this is just bullshit reporting. If you pick on these figures and reports, you can pick them apart, literally pick them apart, right? They are so faulty when it comes to actual thinking. Just thinking is so wrong, right? They're saying it's $1.4 billion. On what basis did you come out with that number, right? How much of it is actual conversations? How many conversations are you being able to do right now, right? What is the top line of those conversations? What is the bottom line? How many people are actually paying? What is the discount rate that you're giving? Are the gross margins positive? Are they not? On what basis are you projecting the growth of this particular market? So share chat, it's trying to go public, the bubble of all bubble companies, and as it tries to go public, it's basically doing a lot of PR. So share chat has a product in this market. It's called Vibely or something of that sort. Dost has raised about $31 million. Oh my god. Friend raised $8 million. ShareChat has Vibely and so on and so forth. Now these people are looking at raising more money, no money, so that they can move the market. It's even used extensively by last mile vehicles like the small mopeds operated by Swiggy, made by Yulu. Oh, okay, yeah. That is a slightly different play, Mr. Pandit. That's a slightly different. It's not. It's a very very small subsection of the kind of vehicles we're talking about in general, right? Mainstream. So yeah, that is true. The Yulu play is happening. They were built like this. They were built like an open thing, right? Anyway, so social media 2.0, where people pay for conversations in India per minute. That's the story that they're trying to sell, right? Beyond dreams, reels, and live streams. Just take it to the bank, right? It's another one of those stories that don't pan out. Moving on, folks. GI and carbon tax on India EU agenda for Jan. So GI, that is geographical indicator. You know why they're talking about GI, folks? Uh, Hint: it's related to a conversation that we've done when a foreign company took over a small artisanal thing and made it their own, and then they snowballed into a huge legal case. You remember that? You remember that GI code? Why must India and Europe be talking about the GI code thing? I'll give you a minute. Not a minute, but let's say 10 seconds. Prada, Mr. Kumar, didn't even let me take the sip. Prada case. So GI code is basically copyrights which Solapuri chappal. No, it was Kolhapuri chappal. But S and K may be close to it, Mr. Tushar Tiwari says. So Kolhapuri chappal play. The GI code thing says that if something cannot be copyrighted as it is generally, right? Intellectual property rights cannot be acquired for something which is traditional, which has a history, right? So what you do is you give it a GI code, and basis that GI code, it becomes a collective copyright of that particular place. So let's say Kolhapuri chappal, right? Khurja cups, Khurja ke, the, what do we call it? Pottery, Khurja pottery, and so on and so forth, right? The GI code is a very big deal now, and India is talking to EU about implementation of it. So cases like Prada don't happen again, right? So that is what they're doing. And then, of course, the carbon tax. Carbon tax is something that EU has been loading on India. So that becomes a bit of an issue, right? The origin norms, the carbon tax, and so on and so forth. Early January, on a range of trade issues, including export controls on critical mineral, IP priority rights, carbon border adjustment, and so on and so forth. So the carbon thing has been a very big pain in the neck for India, because India even called it a colonial practice of essentially unfairly harming India's exports by laying on these carbon terms, right? So the whole country of origin and carbon norms for everything. So even with coffee, they want some certain certifications going their way. So that's what India is going to be talking to Europe in January. Let's move on, folks. A lot of political chit chat, which we best not discuss. You know what? I did an experiment. So I just made a short video and I posted it on YouTube. And this time it was slightly political. So it's something that we've talked about, the analogy thinking. But I actually made a case politically that why influencers who are comparing certain governments to, let's say, Nazis or Mussolini and so on and so forth, that's not a good thing, right? I said that and it didn't work out, man. So discussing politics on the internet is a very bad idea. I knew it. I just wanted to, let's say, try it. I tried it. Didn't work out at all. Moving on. Big brands want a ticket to get on the gravy train. The likes of McDonald's, KFC are said to be in talk with Indian Railways to set up outlets at the stations. Well, we've talked about this. Indian Railways is trying to monetize in every way possible, right? What are the ways it can monetize outside freight and outside passenger? Well, they can lease land. They can essentially sell the waste products, the dump, the residual things that get left behind when they're trying to, the freight forwarding thing, when they're trying to get minerals across, right? Some of that sells. So that becomes a source of earning. Then, of course, there's rental agreements, the lease agreements from food outlets. Then there's development projects, right? When you give up land parcels for various real estate developments, right? And advertising is one, right? Tech partnerships is another. So these things are some of the ways in which railways is trying to monetize itself, right? Revenue boost, very necessary. So that's what is the Indian Railways posted non-fare revenue of 588 crores in FY24, and 686 crores in FY25. So that's what they're trying to do. The non-fare revenue they're trying to boost, which is very necessary because railways has just net revenue of what, 3,000 crores, which is not enough, right? So that's what they're trying to do. Higher scale and frequency, strong ROIs, volume-led sales, and so on and so forth for people like Haldiram. Moving on, folks. High Court has told PSU banks to not take action on the Anil Ambani case, right? They say the BDO guys are the auditors, the big six, right? In the audit, they say their competence is in question, so you cannot take it up. Notice is based on audit by BDO, whose competence has been challenged, right? So that's what's going on. Is it a news? Is it a significant news? It has Mr. Anil Ambani again warmed up to the government. What is happening? We don't know. We can only suspect, but it's very, very interesting, right? It seemed like his troubles were over, and somehow they got back with vengeance, right? Very, very weird. But speaking of rail, folks, we talked about rail. Delhi has a news. Cabinet has given a green signal of 12,000 crores for expanding the Delhi metro corridors. Three metro lines are going to be, expanded. 12,000 crores. Some 1,700 crores are going to be contributed Delhi and central government, and then 5,000 crores is going to be secured by DMRC as loans, and so on and so forth. Metro in India is 1,090 kilometers expansion in total expanse, 26 cities, right? In Delhi has about 395 kilometers, out of which 289 is in NCR. So that's what's happening. They say that it's going to be solving the pollution trouble. They say it's going to be carbon light exercise because it's going to help 60,000 office goers and 2 lakh passengers every day. And it's going to be very nice. It's going to be from Central Vista, which is under construction, and so on and so forth. So if you need some numbers, 33,000 tons CO2 emissions will be saved every year because of these new corridors, right? Delhi Metro network to over 400 crores. It's going to expand to 400 crores. 60,000 office goers, 2 lakh visitors on a daily basis. Metro has been incredible, right? In Delhi, it's been exemplary, and it's going to get expanded. Let's see how that goes on. Moving on, folks. Lower fixed transaction fee for power exchanges in the work. Talks in initial stages aims to bring in greater transparency and predictability. Earlier, there used to be a ceiling-based approach, right? Now, fixed transaction fee. The Central Electricity Regulatory Commission, CERC, on the need of differentiated and fixed transaction fee for power exchanges. That's what's happening. By the way, this is what led to the Indian Energy Exchange stock value erosion. It's one of those things which led to it, right? It's pretty interesting. India Energy Exchange has little incentive to reduce fee under the current structure, while the other exchanges lack the financial headroom to undercut pricing. And that's why this has happened. This effectively cuts IEX monopoly over the whole play, right? And that is what it is. Let's move on. It's an old development, and it's taking shape now. We discussed it about 3 months ago, if you remember, right? The IEX stock was already in the toilet, and it's not gonna get better, right? So that is what it is. Very interesting. Let me check the IEX stock, how it's doing. IEX share, it's down 2%. In the last year, it's down 22%. In the last 5 years, it's up 95%. So in the last 5 years, it was 72. Now it's 140. It's almost doubled in 5 years, right? Giving a slightly better return than the index. But now the prospects are bleak. If you look at the last year, 22% negative and down from 200. So it's a 70%, almost 35% lower than the peak. That is IEX. Let's move on, folks. We've discussed this in detail, if you remember, folks. Moving on. Reliance resumes some Russian oil imports. That's okay. Industry seeks faster tax dispute resolution, cutting litigation, TDS reforms, and clarity on JAR top demand list. JAR is General Anti-Avoidance Rule. Who doesn't want less litigation? Tell me something new, right? No shit, Sherlock. Speedy dispute resolutions they want. Let's move on. Government is ensuring safeguards on the New Zealand deal of imports of Apple. So we're going to get New Zealand apples, right? But they're not going to hurt the domestic players. Claims the government. Moving on. Interesting. Consumer complaints on dark patterns being addressed, says Mr. Joshi, Consumer Affairs Minister. Dark patterns. Dark patterns has been something that has been pioneered by a company called Zepto. They pioneered dark patterns, if you remember. Before Zepto and its operations in India, dark pattern wasn't a news. Do you know that? The dark pattern as a phrase came along when Zepto came out with its practices of doing shady things to take out money from people, right? So at the outset, you have certain amount of money, and then when it goes inside, you find out that they're charging more, and so on and so forth. At the last second, they improve the prices, and so on and so forth. This is something that they pioneered, so you got to give them credit where it's due, right? So they say that consumer complaints on dark patterns are to be being addressed in present tense, present continuous. Well, do you think they'll be able to do anything about the dark practice, the dark pattern thing? Do you think Indian government and Indian regulatory authorities will be able to curb the dark pattern play? Or do you think it's going to be more of a market response thing, right? The company who's engaging in dark pattern, there's going to be a social media outrage. People will not use that, so the competition will gain. Would the market fix this, or would the government fix this? That is my question to you. Please, let's go. Would the market fix this, or would the government fix this, or would it be a bit of both? What do you think? 1.4 lakh consumer cases have been filed and over 1.4 lakh successfully disposed as of December 2025, right? 90,000 hearings have been conducted nationwide. Launched on January 1, e-Jagriti is a digital platform that allows consumers to file their reports. Anybody, folks? Nobody? Nobody to answer this? Is it going to be the government that solves this, or is it going to be, just the consumer response to it? Is market going to take care of the dark patterns? Can the market take care of the dark patterns? Do you think market is capable of taking care of something like this? Market, says Mr. Tushar Tiwari. Well, I'll tell you something, Mr. Tiwari. What I think is the market is ill-equipped to take over, because market is itself being distorted by these players in general. If market was taking care of this, these industries wouldn't have existed in the first place. Would market have allowed negative gross margins, right? Would market have allowed companies losing $100 million, that 800 crore rupees a month on something like this? It's not the market that is playing out in the quick commerce game. It was never the market. If we would have left it to the market, and if market was functioning well, this particular industry wouldn't have taken shape. This particular industry came up because they came with the power of distorting the market with negative gross margins, right? With deep discounting and so on and so forth. So market won't be able to take care of it at all. That is the gruesome reality of the situation. So let's say, what can the market do if a quick commerce company engages in dark patterns, right? There is one company which doesn't do that. So the market would say that the company customers will trust the other party, and they wouldn't go for this particular company, and they would go for that company. You know, but a brutal and a very very easy fix of that is that this company announced a very discount, a serious deep discount campaign, right? So just for the curiosity's sake, people are going to turn up to this and they're going to be cautious. But as the deep discounting turns real, this particular player will start losing customers en masse, right? And they'll be back here. So the market won't be able to solve for this. Unfortunately, uh, Adam Smith's invisible hand doesn't always play out, right? Do you buy that explanation? Mr. Peeyush Sethi says Zepto did get a lot of flack for such things. They did. They did. Moving on, folks. Bonds rally on RBI's liquidity push. RBI, we talked about it yesterday. RBI is trying to inject liquidity by OMO, open market operations, right? 2.9 lakh crores. RBI wants to inject liquidity. RBI had, Mr. Tushar Tiwari writes, I have seen folks switch between Swiggy Zomato even for 20 rupee difference. 20 rupee? They'll shift for 5 rupees. So the market essentially won't work, is what I'm saying, right? And unfortunately, the government also won't work. So it's gonna go on. It's one of those things that don't get solved, right? Like the pollution. Moving on. Market can't correct dark patterns, says Mr. Ankur Pandit. And he's 100% right. Right? So that's the beauty of the situation. I mean, this is the kind of stuff. So if you ask anybody, right? If you ask anybody, the free proponents of the free market, they'll be like, the market is going to take care of it. The market is going to take care of it, right? And these people are very, very accomplished, big, huge people, right? The market is going to take care of it. Don't worry, sir. Don't worry. Don't worry. And then you ask them a simple question, which I just posed, right? How is this happening? The market shouldn't have allowed for it, right? And then the response to this is, the market can be irrational longer than you can be solvent, right? That's the response. So essentially, market cannot take care of everything. Moving on, folks. So we were talking about bonds rallying on RBI's liquidity push. RBI wanted to push the liquidity. Liquidity had gotten crunched because RBI had bought, did it sell dollars? Yeah, it sold dollars or buy dollars. I get confused. So if it buys dollars, right, rupees are gonna be in the market. So that's gonna be injecting liquidity. No. So it actually sold a lot of dollars. RBI had sold a lot of dollars, and RBI had done a lot of things to make the rupee stable, right? And that sort of was very important, but that led to some sucking out of liquidity from the system. Now, in order for the lowered rates to translate into action actually on the ground, RBI needs to inject liquidity, 2.9 lakh crores, right? Now, what it's going to do is going to be the yields on the 10-year bonds have come down. The yields have come down because the prices of the bonds have gone up, right? Because RBI is back buying bonds, right? As it buys bonds, money is going to come to the system. There's going to be liquidity, and then there's going to be open market operations as well. So that's what's happening. The yields, the bonds are rallying, right? As RBI is looking at buying to make the liquidity come alive. Easy, folks. Everything is very first principles. It's not complicated at all. Quick commerce is killing the local retailer, and those will not come back in a jiffy when quick commerce pricing delivery strategies change, says Mr. Ankur Pandit, and that is Mr. 100% right. Let's move on, folks. Metal shine takes hint copper, hint zinc high up. Yeah, metals are going up. That's okay. 5 promoters sell 26% in VIP Industries for 1400 crores. VIP, the success story of Mr. Rakesh Jhunjhunwala, the great investor. Rest in peace. It's not doing so well lately, right? Because the second generation is not as involved in the business. Let's move on, folks. Santa rally happening. S&P Dow record highs. Indian markets also doing well. 2/3 of Nifty, however, 500 stocks Trading in an overvalued zone, small caps most expensive, financials remain attractive. That's what's happening. Indian equities are generally doing better than before, which is nice. Which is nice. Let's move on, folks. We've talked about how Indian companies are looking at domestic bonds instead of dollar ones, right? Not very cool. Longer tenor, tighter spreads available in the rupee market. Yeah. ECB rule changes, Fed easing may change the situation, will lead to a climb. We've talked about this. Let's move on. Credit card spending has cooled pre-festive levels in November. No surprise to anybody, shouldn't be any surprise. Spending down 11% from October, but 12% from previous November. So year on year it's going up, month on month it's going down, but it's a festive thing, it's gonna go up back in December and January. That's how the consumption patterns play out, right? No surprise to us. We've been talking about this for 6 months now, and exactly that's how they've panned out, right? The consumption patterns. So we're not worried at all. Let's move on, folks. Ruble has grown by 45% in 2025. Sanctions curb forex demand affecting export revenues. Ruble is Russian currency. Russian currency has gone up, right? Because there's less overseas demand. What happens when there's less overseas demand of a particular currency? The forex demand, it basically currency rises. What happens when the currency rises? The exports become expensive. If exports become expensive for people, you become uncompetitive. If you become uncompetitive, you're screwed, right? So we've talked about how China ruled the export markets because of devaluation, right? Russia is having the opposite trouble. The currency has gotten up by 45%. 45%, man. Crazy, right? Crazy. Unbelievable. Every major currency they've outpaced, trading near 78 per dollar, touching distance of the levels before Russia and Ukraine conflict. Key driver has been drop in demand for foreign currency in Russia amid international sanctions. So foreign currency in Russia and less in demand, that means higher demand for Russian currency, which means up goes the ruble, right? That's where talk. I hope it's not ruble, it's ruble, because ruble is just dust, right? It should be ruble. Let me check the pronunciation of Russian currency. Russian ruble pronunciation. How to pronounce Russian ruble? I can't. Yeah, ruble. Yeah, it's ruble. Ruble. All right. Did Russia end up a true Atmanirbhar? Says Mr. Peeyush Sethi. Well, Russia had to end up being true Atmanirbhar because they sanctioned them, they tariffed them, they pulled them out of the SWIFT system. SWIFT system is the global payment system. They started seizing billionaires' properties and yachts, right, abroad. So Europeans started seizing Russian oligarchs' yachts and their properties and their assets abroad, and it became a very big international business scene. Like, how can you actually seize somebody's thing, right? That's not cool. And that also led to dollar risk because these people owned dollars and you sanctioned them, and basically dollar itself became fragile, right? Because if you hold dollars and if you hold assets in dollars and then suddenly somebody can sanction you and take you out of that system, and dollar doesn't get used in that way at all, it leads to systemic risks for the currency itself, right? So it was a double-edged sword for the West, but they did it anyway. And Russia essentially held on because of two countries, or let's say three countries. You know which three countries saved Russia? Yeah? You know that, right? You know that. Which three countries? In order, if you may. Three countries that saved Russia. We've talked about this. It was China, India, and Turkey. You're right. India, China, North Korea, says Mr. Peeyush Sethi. No, that's not true. But Turkey, you're right, Mr. Peeyush Sethi. And China, India, Turkey is the right answer and in order by Mr. Sumanth Kumar. US rare earth buyers still in problems despite Trump deal. So Trump being the TV star, right? Reality TV. Everything is not reality TV. That you solved this, you've solved that. You know, the Israel-Hamas peace plan, and so on and so forth. Nothing gets solved actually, right? That's the beauty of the situation, and that's exactly what's happening with the China rare earth deal, right? People still facing problems. Moving on, folks. MeitY, that is Ministry of Electronics and Information Technology and all, they are showcasing 100 local apps at its AI Impact Summit. Focus on AI-driven solutions for grassroots challenges across global south. That's what's happening. So nothing is going to happen unless they force adoption. Again, this is the market thing. A question arises. Markets could lead India. Mr. Ankur Pandit said India, Brazil, China. No, no, it's not Brazil, Mr. Pandit. It's Turkey and China, of course. So, uh, yeah, so the market says that Indian AI apps should survive, right? Or should not survive, basically because they're not good. But market has no role to play there. Or market, if it was left to the market, India would have no AI industry, no semiconductor industry, no nothing, right? Businesses are an outcome of the political will, and because there is political will, that's why we are having this Indian semiconductor mission and Indian AI mission. Only because there's political will to boost these particular industries. It's not the markets that's sustaining the momentum in these particular industries. It's the political will, right? And right now, the political will says that you got to manufacture in India, you got to manufacture the ECMS thing, right? Core component manufacturing, the smartphone manufacturing is already passed, and so on and so forth. So this is not the market playing out. If it was just the market, everybody would have gotten demolished. China wouldn't have had an AI industry, right? But they do, because they have incubated that industry, forced adoption, and so on and so forth, right? If markets were to take over, there would be no steel industry of the world, right? China would be dominating everything. So market again, uh, political will is required by India to enforce adoption when it comes to Indian AI, right? If Indian apps, Indian companies can get uh, a lot of forced adoption by the government or by private sector enterprise, forced by the government, and so on and so forth, it's going to be very, very good. And we are losing that train. We are losing that train every day, right? When we uh, have chat GPTs, Perplexity, Google Gemini, everybody taking over the market in this frontier industry, and we have nothing. Uh, Even though we have solutions, they're not getting used. It's just a travesty, which somehow needs to get corrected, right? Let's move on, folks. Cuckoo FM's revenue has risen to 242 crores. Losses have also risen to 150 crores. Something of that sort, right? Yeah. Net loss 150 crore net loss at 242 crore revenue. That's not healthy. I was very bullish on Cuckoo FM because the audio books play was huge, right? And audiobooks play was also profitable by design, because let's say if you're making an audiobook, you're not getting into the production hassles. You're not Netflix, right? There is a book which is already a hit. All you got to do is make an audiobook and sell it. Because the book has brand equity, your audiobook is also going to sell. People can't read books anymore. They listen to audiobooks, right? Walking, while running, and so on and so forth. So your product has a natural pull, and it has a natural way of sort of making money as well, right? Because people are willing to go and pay for audiobooks because they essentially want to have that experience. It's a nice thing. The best part is that it doesn't have any production overhead. Production overhead means that you don't have to design anything. You don't have to write a book. You don't have to write anything. You don't have to create something creatively. A book is already written. What you're doing is an operational turncoat play, right? And that makes the business very, very healthy. However, these people screwed it all up by getting into shows and all, right? They're producing shows now, micro dramas and whatnot. Uh, some Now they're getting into the creative part. Now they're screwed because they are not creative people. They're a bunch of nerds, uncreative, untalented people who have nothing to do with arts, right? In general, right? And that is something that you cannot hire. That's something that you cannot just do. That, hey, creative guys, come and make something. That's not how it works. And that basically becomes a hit and miss kind of a thing. That becomes box office, right? The problem is when you're trying to do something creative, it becomes a creative operation, and it's basically show business, right? You've got to make a show, make sure it succeeds, make sure it's the right show. Once you've made that show, you've got to make another show, which is also supposed to work. And you've got to have an inventory of shows which work. If none of those shows work, or if few of those shows work, your financials start drawing down. So now it's no longer a hot company. I have revised my position on Cuckoo FM. I was pretty bullish on the company, by the way. The audiobook thing, that seemed like a nice bet, but they expanded because the market would have been small, right? They could have done it profitably, but that wasn't probably enough. Let's move on. So Atomberg revenues zoomed 20%. Losses have been cut. They have Atomberg 958 crore in revenues, and losses are 117 crores. They're going public. They're looking at going public. Let's see what happens. Moving on. IPO offline push and M&As change math for test prep sector. Sure. Test prep sector. That is interesting. Let's move on, folks. Quest Global 6% stake sale, $4.5 billion getting valued. The engineering firm Quest Global, binding offers put in, right? Hill House joins Temasek in a race to acquire a 6% stake in Quest Global. It's really funny how most of the companies discussed revenue and losses in the same sentence. What did you mean by that, Mr. Peeyush Sethi? Most of the companies discussed revenue and losses in the same sentence. I didn't get that. I'm sorry. Let's move on, folks. Yeah. So, Asia-focused private equity, Quest Global, the Singapore-headquartered engineering services outsourcing company, at an estimated $4.5 billion. A lot of big private equity action. Winters haven't happened yet, right? As you can see, not very cold. That has screwed up the apparels business because people are not being able to buy jackets. They don't want to buy jackets and sweaters and so on and so forth. So the winter inventory is down low. But as a second order effects, because the winters haven't been so cold, the eateries have benefited, right? Because the dine out thing is working. It's not that inconvenient to go outside and have a drink or eat or something like that. Deliveries, by the way, are 30%. They're pretty good. But dine out has also started increasing. Dine outs is where restaurants actually make money. So that's what's happening. So two news items. Just like monsoon had gotten delayed. What had happened was summers had gotten shorter, right? Early monsoons had led to shorter summers. Now, shorter summers is good news for people because, less heat, less problems. But it screwed up the AC companies, it screwed up the ice cream companies, screwed up the beverage companies by a lot, right? That was the pros and cons. And now the same thing is happening with winters, right? The winters have gotten delayed a little. They're not happening that much. The apparel companies, which had huge inventories, they're not working out. But the dine-out companies, the eateries, the pubs, and so on and so forth, they're nice. Let's move on. Second order effects. The world runs on second order effects. Most people don't even think about second order effects. And that's the biggest undoing of them, right? Select City Walk's founder, Mr. Arjun Sharma, has bought a 125 crore bungalow in Delhi's west side, right? A Delhi bungalow, 125 crore. It's better than Lutyens apparently because it allows a lot of reconstruction. Lutyens is very, very tight. No reconstruction allowed. That maintains the class of it, right? What is it called? The West End, not the West Side, the West End, 125 crores. If you want to read about Select City Walk, the founding of it, sort of like a biography, there's a book called Inheritors written by Sonu Bhasin ma'am. I've recommended it a lot of times. So Select City Walk is one of the stories of that particular book. It's a beautiful story that these people actually sold a company, right? This Sharma family, they got 2,000 crores or something of that sort. They didn't know what to do with that money, right? They were like, what do we do with this 2,000 crore? Because if we don't spend it, we're going to tax it or something of that sort. It's going to happen. They sold a company and they didn't understand. They didn't want to keep it as cash because it depreciates and so on and so forth. They had serious problem of deploying this 2,000 crores. So they didn't also want to start something very, risky or something of that sort. So they came up with the idea of this real estate project, right? Select City Walk, which is a mall, which is not exactly going to sell the inventory. They're not going to sell the shops. They're going to lease the shops, and they're going to be having a control on what sells and what doesn't sell. So even if you can pay the rent, you won't be able to you won't be allowed to be in the mall if your sales aren't good enough. So they actually have a very interesting model where they're looking at optimizing the experience of a buyer, right? So if a buyer is coming, they want things to sell. So they don't want dead inventory, dead shops lying around. It's a very interesting story. You should read it in The Inheritors, a good book. Not a good book from a literature perspective, not a written written word perspective, but extremely informative, just extraordinary. I've done a podcast with Sonu Basin ma'am. If you want to read that, oh sorry, watch that, you could watch that. It's not on Inheritors, maybe it's on Indian business history in general, right? The books that she's written, good book. Let's move on, folks. Navi Mumbai airport is taken over. It's taking off today. A big deal for India and the world. Navi Mumbai airport is gonna declutter the Mumbai airport, which is great news. Which is great news, folks. Let's move on from that. We've talked about it. The geopolitical thing. China wants more foreign inflows, is opening the markets. That's okay. British Petroleum is offloading 65% stake in Castrol for $6 billion. Reduction in debt, business set on anvil in a turbulent year. British Petroleum not doing well, right? Selling Castrol 65% to pay debt. Well, that's okay. Moving on. Gold is done well. And with that, we come to the end of the 199th episode of Thinker's Frequency, folks. Our daily mental workout. Mr. Ankur Pandit, right? You should look at the ORS lookalike debacle playing out. Their firm citing inventory issues continue to selling sugary products with names that sound similar to ORS, a WHO formula, life-saving product with high incidence of diarrhea, etc. There's a lot of, it's a viral movement, right? That there was this case, this lady fought this case and she finally won it, and these companies were advised to do that. Now it's on the law enforcement, right? So I've heard about this case a lot, the ORS thing, that these people sell basically sugar and all instead of ORS. Pretty pathetic pieces of shit, but that's India. That happens. Less enforcement. As we talk about India, all the problems come back to just one part, which is called incentives and deterrence, right? There's no enforcement. The judiciary, which is the final stone when it comes to enforcement of it, is very bad. It's now in a winter break, by the way. So if you look at the final solution to all problems, right? What is the incentive for good behavior and what is the deterrence for bad behavior? Is there enough deterrence for bad behavior? Is there enough incentive for good behavior? If that is true, if it exists, it's all good. If it doesn't, it's all bad. In India, it's all bad, right? There's no good incentive for good behavior. There's no deterrence for bad behavior. So whoever is doing good behavior in India, they're doing on their own volition, at their own volition, right? They are basically very good people who are just following like good principles, right? Essentially. But there's no incentive in this society for good behavior. And there's no deterrence for bad behavior as well. So these companies, these assholes, can be selling a fake ORS, the sugary thing, despite a legal case ruling against them, because there's lack of enforcement. That's a very big problem. Moving on, folks. Hello, Nishant sir. Do you believe in Sanatan Dharma? Asked Mr. Codename Alpha X. Well, I'm a Hindu. I'm a practicing Hindu. So yes, yeah, I'm a pretty devout Hindu. Right? So I do believe in my religion. I don't know why you asked that though. But yeah, with that, we come to the end of the 199th episode of Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch in. It's 9:43. Oh my god, we are so late. We're gonna punch in. Probably it's the Christmas thing, right? which made me lose track of time. We should punch in now. It's working day for me. Uh, I wish you have a beautiful day personally and professionally. I'll see you tomorrow, same place, same time, hopefully. Please take care. Have a beautiful day. Merry Christmas. Have a nice day. Bye bye. I asked that for a specific reason because. Because what? I'm waiting. I want to look over one man on YouTube name. Okay, I'll have to go.